a first homeowner is not easy. You're pretty much at the bottom of the property market food chain. Whenever you go to an inspection or an auction, you're competing against experienced investors, buyers agents, even second-time home buyers have an advantage over you. No wonder it feels so hard. And in a hot housing market, it's even harder. Houses are disappearing almost as soon as they're listed, and often 5 to 10% above their asking price. You might be wondering if you're ever going to get a home of your own. In this kind of market, it's easy to get overwhelmed, frustrated, and disillusioned. But that's where you need to be careful, because if you're not on top of your game, you might end up making a big mistake. Mistakes that could cost you thousands of dollars or leave you owning a property that you never really wanted in the first place.
What a piece of junk!
Today, more than ever, you need to tread carefully to make sure you don't make a decision that you'll regret later. And that's what I'm going to cover today. I'm going to give you a list of common mistakes we see first homeowners make in a hot market and how to avoid them. And before we start, if you find this video helpful in any way, do me a little favor and hit that like button or leave a comment below. Just a little gesture like that can make a huge difference to the channel. And if you haven't already, hit that subscribe button below. Thanks you guys, it really means a lot. And let's dive in. The first two mistakes we commonly see in a hot market are basically the flip side of the same coin. The first is acting out of desperation, and the second is hesitating. Let's look at the first, acting out of desperation. Look, I get it. It can be frustrating seeing a home disappear before you've had a chance to even see it. It can be even more frustrating being pipped at the post by someone who had an ever so slightly higher bid than your own. You might be tempted to throw caution to the wind and jump on the next available property that looks vaguely like it might be a good fit. After all, having a home is better than having no home. Am I right? Wrong. Acting out of desperation has no place in the home buying transaction. You're spending hundreds of thousands of dollars on this home, and you should be planning on living in it for at least the next 5 to 10 years. This is not the time to just buy something for the sake of buying it. If you act out of desperation, there's a good chance you'll end up with a home that you really didn't want. And there's an even greater chance that you'll spend more money than you can afford in the process. So my advice is simple. Don't do it. If you find yourself getting frustrated or feel the temptation to buy whatever comes up next, then it's time to have a break. Give yourself a breather. Stop looking at properties for the next couple of weeks and realign yourself. It will save you a lot of money and frustration in the long run. The next big mistake we see is hesitation. In a hot market, there's no time for second guesses. You need to be ready to make an offer as soon as you're confident that that property is the right house for you. If a counteroffer comes, you better be ready to accept it or counter back with your own offer. Things move quickly in a hot market. If you hesitate, someone will swoop down and take the property right out of your hands. At this point in time, you might be thinking, hang on a minute, Nathan, didn't you just say not to be impulsive? Yes, I did. The difference between acting out of desperation and acting without hesitation is simple. Acting out of hesitation means you're crystal clear about what you want, how much you're willing to pay, so when the right property comes up, you're not humming and ahhing on whether it's the right property for you and whether or not you can afford it. To be able to do this, you need to be prepared. You need to make sure you know your borrowing power. You also need to make sure that you have a pre-approval or eligibility in place. And you need to make sure you know exactly what you want in a property. Once you have this, then you're ready to pounce. You're not buying out of impulse. You're making a quick decision to take action once you find the right property. If you're not quite ready, then we can help. We've made a worksheet which will help you build a home buyer brief, a document which spells out exactly what you want in a property. Check out the link below to find out more. And if you don't know how much you can afford, we can help with that too. Simply head to our website and fill in the free assessment form. We'll be able to tell you exactly how much you can borrow and let you know if there's anything else that's stopping you from getting a loan. Let's move on to our third big mistake, which is ignoring the market. As you've heard me say before, no one knows which way the property market's going to go. We've all got our opinions, but the market is simply too unpredictable to know whether it's going to go up, down, or sideways in the coming months or years. Getting the market timing exactly right is like a lottery. You might be lucky and buy just before prices explode, or you might be unlucky and buy at the absolute peak of the market. It's impossible to know, which is why I recommend that you make a decision based on your own family, personal, and career situation. If it's a good time for you to buy right now, then go for it. Buy regardless of what the market is doing. But you can't ignore the market completely. While you can't time the market, you still need to keep an eye on it, because knowing what the market is doing is super important in your negotiation strategy. When you're in a hot market, like we are now, you need to be super aggressive and put your best foot forward right off the bat. Alternatively, when in a slow market, you can take time, throw in a lowball bid, and test the waters before you do anything. And the conditions aren't Australia-wide or even city-wide. For example, in Brisbane, the property market could be booming, but an individual suburb or an area could be going in the opposite direction. This is where you need to do some research. Ask your real estate agent for details about recent sales in the neighbourhood, and for a more comprehensive view, you can use a tool such as DSR data to review a suburb and see how it's faring compared with the overall market. Mistake number 4 is misunderstanding your budget. I spoke about this earlier, but I want to clarify some things in more detail. In a hot market, you can't just run the numbers in your head. You can't just stick your finger in the wind and pull out a budget out of thin air. You need to be crystal clear about your budget. To start with, you should have an eligibility or a pre-approval, like I mentioned above. Once you have that, you should go one step further and look at your maximum borrowing capacity and expected repayments. Then choose what you'd be most comfortable with spending. That's your initial deposit. Next, choose a figure that is your absolute maximum you'd ever want to spend. That's your walkaway price. Basically, if you need to spend more than your walkaway price, then you don't. You walk away, move on to the next property, and chalk it up as one more experience. In a hot market, you're going to feel pressured to overspend. So set your budget well before you start making offers or going to auctions. Which leads me to mistake number 5, which is overpaying. Hot markets mean multiple offers. Auctions turn into bidding wars. Real estate agents will play one buyer against another to make sure that they get the highest possible price. Don't hate them for it. It's their job to make as much money as possible for their client. But don't let yourself be pressured into spending more than you're comfortable with. Or worse, more than the property is really worth. If you overpay too much, you could find yourself stuck in a sticky situation. The bank will do a valuation on your property as part of the home loan application process. If they don't think the property is worth what you've paid for it, they won't lend you the full amount, which means you're in trouble. You're either going to have to scrummage up some extra cash to cover the deficit or risk losing the deal completely. And if you bought a property at auction, which means you don't have a finance clause, this could cost you thousands of dollars. Make sure you do your own valuation before putting an offer down or go on auction. You need to have a fair idea of what the market valuation is, so you don't end up overpaying. There are a few free tools on the internet that can help. Alternatively, hit us up at Hunter Galloway and we can give you a free RP data report. Mistake number 6 is thinking you need a bigger deposit. Contrary to popular belief, you don't need a 20% deposit before you can get a home. And with property prices the way they are at the moment, thank God. When you're in a hot market, the rising property prices can outpace your ability to save a deposit. So if you had to wait until you had a 20% deposit, you'd be on a never-ending treadmill, unable to catch up to the market. In practice, you can get away with as little as an 8% deposit. This amount is enough to cover the minimum 5% deposit required by most lenders, along with having a bit of spare cash to cover for things like stamp duty and other fees. You will need to pay lenders mortgage insurance if you don't have a 20% deposit, but it might be worth the extra cost. The next big mistake we see is skipping inspections. I almost feel like I shouldn't be mentioning this one, but we're seeing a surprising trend with people buying houses sight unseen. Maybe they're just desperate. Maybe they're willing to roll the dice, or maybe they're just keen to get in the market and don't care what the property looks like. But in my opinion, buying a home without doing an inspection is crazy. You're basically trusting a photographer whose job it is to make the property look as good as possible, and a real estate agent whose job is to sell the property for as much as possible to give you a fair representation of the property. Talk about conflict of interest. Inspections are a critical part of the home buying process. You need to be able to make sure that the property is in good condition and a good fit for your family. You need to be able to make sure that there's no glaring issues or even small things that might bug you when you're living there. And most importantly, you need to be able to walk around and imagine yourself living there and deciding whether it's truly a place you could call home. And if you can't make the inspection in person due to the pandemic or living interstate, at the very least, do a virtual walkthrough so you can get a feel of the place. Not reading the contract. Things can move pretty quickly in a hot market. It can be a bit overwhelming, but regardless of how quick things move, you need to take the time to carefully read and make sure you understand the contract before you sign it. Don't get caught up in a rush. Some contracts can hide some nasty surprises, and even the standard contract can cause some issues if you don't know what you're signing. We'd recommend seeking advice from a solicitor, but whatever you do, don't sign the contract before you understand what you're signing. Being influenced by the wrong things. It's easy to fall in love with the little things in a house. A nice front garden, beautiful fittings, a good view, or even an open plan kitchen with a lovely middle island bench. These things are nice to have and they make living in the home a lot nicer, but there are more important things to look at. Make sure you cover these questions before deciding to go ahead with the purchase. Is the property big enough for your needs? Is it close to schools, playgrounds and recreation? Is there shopping centres and public transport nearby? How far is your commute going to be? Are the neighbours nice? And does the house have potential to grow in value? Don't lose the forest for the trees. Keep the big picture in mind and make sure you cover the fundamentals before you get too caught up in the little things. Looking for your forever home. Your first home doesn't need to be your forever home. You don't need a home that'll last you until retirement. You'll only need to find a home that'll suit your needs for the next 5 to 10 years. You can always upgrade, downgrade, or move somewhere else in the future. Buying yourself a starter home and then looking to upgrade is a great way to get in the property market as a first step. Once you have your first home, your mentality will change. Instead of being worried about growth in the property market, you'll actually be excited. As the value of your home grows, so does your equity. It will make it much easier to save a deposit if and when you decide to buy that second property. So that wraps it up for today. If you need help with an eligibility letter, a pre-approval, or even just getting a valuation on a property, get in touch with us. So what's preventing you from qualifying for a home loan? Here at Hunter Galloway, we get home loans approved. So if you're living in Australia and looking for a mortgage broker, we can help. Visit us online at huntergalloway.com.au or call us on 1300 088 065 and we'll see you next time.